Now, it's emerged today that top executives at Lloyds TSB were warned that payment protection insurance was being missold 4 years before they actually stopped selling the product. The former chief financial officer and chief risk officer told the Banking Commission today that the bank's own audit committee had sounded the alarm about the practice back in 2006. So far, the bank's been forced to pay £6 billion in compensation. Well, our business correspondent Siobhan Kennedy is with me now. So tell us first, what is so significant about these developments?
Well, Kathy, this is all about payment protection insurance, or PPI, that was sold on loans by all the banks to millions of customers up and down the country that didn't ever need it or want it. Now, the scandal around PPI didn't erupt until last year, but it turns out as early as 2006, an independent member of Lloyds board, a man named Ewan Brown, had raised this issue with the FSA at a meeting he had with them in 2006. Now, an MP today read out a minute from that meeting in which he said Mr. Brown had, and let's have a look at that, drawn attention particularly to the concerns of the directors regarding the lack of minimum standards for treating customers fairly and the FSA's handling of the payment protection issue. In other words, Kathy, as early as 2006, Lloyds independent directors were expressing concerns about the way Lloyds was treating its customers. Now, what's really interesting about that FSA meeting is that he was accompanied by Carol Sargent, who was then Lloyds chief risk officer.
So what did she herself have to say about this?
Well, what's interesting is the session had gone on today for over 3 hours, and it was right at the end of the session when she herself brought it up, right at the end, when she told the MPs, "I wish I'd followed the lead of the non-executive director who did raise it way back in 2006 with the FSA, and we never pursued it, and I wish we had." Now, of course, the MPs weren't particularly happy with her response and grilled her as to why it is that it was raised in 2006, yet Lloyds carried on selling the product for another 4 years.
Siobhan, thanks very much for that.